Most of us assume that Warren was lucky or he was an extraordinary man of intelligence and that is why he succeeded in becoming what he is. One must remember that he made more than 99% of his money after he turned 50. That he started early was a major advantage. It allowed him to make mistakes and perfect himself and then go on autopilot mode. Let us see what we can learn from Warren's life. Most people have said most of these things. Maybe it's repetitive, but I thought it will benefit you. So let's look at what 10 things we can learn from Warren. Most of this you know already. But anyway, take a look. Welcome back to Berich. Rule number one of Warren's great success is his ability to communicate well, along with his partner Charlie Munger. If you do not know how to communicate, there is very little chance that you will do well. Warren was not born successful and was very shy person. Even though he was successful in investing, he was terrible at communication, and at one time it looked very difficult that so difficult that he could not propose to the girl he loved, Sue Thompson. Thompson's father got along fabulously well with Warren. He wanted Warren to marry his daughter Sue, but Mr. Buffett never have got the courage to propose to her. He had to go to a communication course which was very popular there and even today, and then got confidence to speak and communicate well so that he could propose to his wife, get married and have 3 children. This communication skill that he picked up helped him throughout his life, and don't get carried away by the way he speaks today. For many a year, he was struggling to communicate very well. The second thing which you look at Buffett is don't keep looking at the past, look forward. In 1950s, he famously said, "You don't make money by looking at the past. You make money by looking at front." So once you know what has happened into the past and you can discount it, and if the value of a stock or the value of an asset is beaten down enough to reflect its price, then you would be foolish to assume that this asset will not do well. If you buy this beaten down asset, it can turn around and do very well. One such example was when the salad oil controversy broke out. Everybody thought American Express Bank would go belly air and close down, and the value of the stock was pummeled to next to nothing. Buffett entered and put in a lot of money and made millions in buying and selling that stock. If he had learnt his lesson, which I would come later, and not sold American Express at that time, he would have been far more wealthier. But what is important to learn is Buffett learned to look forward and did not look back. When investing, you must learn to innovate. Buffett was a great disciple of Ben Graham, and even today coaches you to read Intelligent Investor. I have read Intelligent Investor many times. But like Buffett has realized, you must realize that things have changed from the Intelligent Investor days. Gold was the standard currency when Graham wrote Intelligent Investor. The dollar is not pegged to gold anymore, and the Fed can print any amount of money today. That is one important change. But the most important change that Buffett made is he picked up Phil Fisher and combined it with Ben Graham at the advice of his partner Munger. He normally did not look at cigar butt companies. He learned to buy good companies and at fair prices and keep them forever. Had he learned this lesson before, he would have hung on to American Express for dear life. Point number 4 that Buffett teaches is live frugally. By frugal means, if you are earning about 50,000 rupees a month, learn to live within 30,000 rupees. If you can live well within your means and save the excess, there is no chance of you becoming bankrupt. So, learning to live frugal is one of the most important things that we must do. Most Indian middle class people and true of Americans also do not know how to live frugally. That is why most upper class Indians and Americans have no savings. The 401 average balance of $27,000 just shows this. Indians have even a poorer track record of saving. Point number 5. Always invest in knowledge. Buffett famously says he tries to read 500 pages a day. The more you read, the more you gain. He accumulated it by just putting things into the knowledge bank and allowing it to compound. If you can even read 50 pages a day, allow it to compound in your mind forever, you will get new ideas. So till the day you die, whether like Buffett or like Socrates, never stop learning. Point number 6. Most important point. You should know when to quit. Buffett learned this when he was doing horse racing. When he started betting on horses, he realized once he evolved a system on picking up on odds and making money. There were days when he lost money. He started to bet bigger, and he realized there were days when you have to fold up your hands and go home, not bet bigger in hope of making more money. In his long-term investing days, you can see this with the way he exited IBM and Walmart. When things didn't pan out the way he thought it would, he knew he made a mistake. He admitted it and got out of IBM and Walmart. There are several other examples I can show you, but these are two big companies which all of you will know and said, and hence I suggested it. There is always, he knows when to put down his cards and know when the game is up. Point number 7, there is think long term. Imagine he wanted to buy Coca-Cola for a long time and he could never lay his hands on it. Only when it cracked, he bought in and bought big. And till this day, he has not sold Coca-Cola. Same thing he did with Washington Post. Till print became unviable, he held on to Washington Post and a clutch of newspapers till he finally sold them for some money after extracting everything from them. When he left Procter and Gamble, he took the Duracell business, which Procter and Gamble did not want, for free, and collected some cash from Procter and Gamble and is still continuing to make money. So even when businesses go out, you should be able to be in a position to squeeze that extra last juice out of it and try to continue to make money. Unless you are not in control of business where you have to fold up. Point number 8. Never borrow to invest. Originally, there were two partners for Warren Buffett who controlled Berkshire Hathaway. One is Charlie Munger, whom all of you know. The third was a man called Rick Gurian, who was the most intelligent of the three. In the early 1970s, he leveraged heavily to buy stocks and was leveraged to the nose. When the market crashed in 73, Gurian got wiped out and he had to sell out his Berkshire Hathaway. Warren cheerfully picked it up for $40 a piece, and Rick Gurian was pushed out of Berkshire Hathaway. He passed away recently. Though he was successful, he was not as successful as Buffett and Munger. Moral of the story, if you borrow money and get caught at the wrong end of the cycle, you are dead. Lot of Indian businessmen, Anil Ambani, Subhash Chandra and many more have learned this story and are feeling the pain today. Don't borrow to invest. Earn money and live frugally and earn the surplus. That's the moral that Warren has taught us. The 9th point is on dividend yield. There are times when companies go out of favor, like what ITC is out of favor and small private sector banks are out of favor. If the business has a franchisee and will continue to grow and the company makes profits and gives you dividends, even though they are out of favor of the market, you can buy those stocks. If you had bought ITC at sub 150, the dividend yield is greater than any fixed deposit. I am very happy that people are criticizing ITC. If they drive the price below 150, people like me can scoop it. We get a better debt instrument than putting fixed deposit in a bank and wait for the market mood to change. There are always places like this, and one must jump down on those places. Finally, you should understand the world is an uncertain place. It's social science. Investing is a social science, and anything is possible. And you should be in a position to take on anything. Buffett has huge piles of cash just ready for that. He has $148 billion. He has not invested much. He is still waiting. But because he had $148 billion, he could sleep soundly, even though there would have been a lot of insurance claims on his companies because of the pandemic. So one must keep cash at all times. We don't know when trouble will come round the corner. To remind himself of this, Buffett has plastered his entire wall in his office with newspapers, headlines of the worst crashes in the world. So if you have a chance to visit his office one day, you will see framed newspaper headlines screaming what can happen when the market gets nervous. So that can happen today, it can happen tomorrow, or may happen 10 years from now. There is no doubt the worst thing will happen. The only question is when. It is for the intelligent investor to be prepared for you. I enjoyed compiling and bringing this to you. I hope you enjoyed listening to this. Thank you for watching Berich. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification. If you use Kindle, you can buy the book using the Kindle link given below. If you want a hard copy, send a message to the WhatsApp number given below and my team would get in touch with you. At the very end, if you want to get in touch with me, please send a mail to berichenglish@gmail.com. I am grateful for your support of Berich.